Just taking the conversation one step outside on the esoteric front, what do you think the markets are going to look like if the participation of banks is going to be muted or lessened as a result of these recommendations coming in force?
Yeah. What's going to happen then is two things. First of all, some risk will literally go away. There will be less risk taken in aggregate, is my own view. Secondly, and most importantly, what we will see is a big shift towards pricing for risk. Historically, risk has been underpriced for much of this decade. What we'll see now is a big change in the price for risk, so that risk will be more accurately priced. If you want banks to take risk on your behalf to supply you with a product, you'll have to pay for it. That's what's going to happen. We'll see a big shift to that going forward, I think.
Given the fact that that your subcommittee and the main committees in the IIF represent a good cross-section of banks, and today more Asian and emerging market institutions involved in that process,
yes.
What would you say are the 3 to 5 top-of-mind concerns that are floating around in that conversation?
Well, the good news, for quite a long time earlier this decade, when everything was booming, it was quite hard actually to get some folks interested, or some people interested in risk management, right? Seen as a bit of a back office staff kind of function. Now everybody wants to make wants reassurance really that how do we make risk management effective? How do we not repeat the mistakes of the past? There are 2 or 3 key elements here. First one, everybody is now understanding that the culture of their organization has a very big impact on whether or not risk management is going to be effective. So we say in our recommendations that the risk culture should be robust. Key question, everybody in the industry globally now wants to deeply understand, what does that mean? What are the characteristics of a robust risk culture? Second point, firms have traditionally managed risk in silos. Credit risk is pretty different than market risk, which in turn is very different than operational risk and reputational risk and so on. One of the big lessons from the crisis was all these parts were moving simultaneously and affecting each other. And the firms that did best in navigating their way through the crisis were the ones that could actually integrate all the pieces together and see the connections between them. So everybody's trying to understand, how do you do that? It's really difficult. The risk profile of banks is opaque even to insiders, let alone investors and supervisors. And in those moments when it's changing very fast, as it did in late 07, early last year, early 08, it's very hard to retain that integrated view of what's moving, what's growing, what's changing rapidly. How do you do that, and how do you do that effectively? The last thing is, how do you deal with new activities? How do you deal with businesses that are maybe outside the boundary of what you've done historically? How do you manage those risks well? These are the kinds of questions that the industry is grappling with right now.
I assume that there's a lot of conversation between IIF and the various regulatory bodies, and you were involved in the steering committee on regulatory capital a long time ago. What do you see regulators doing? I think on the one hand they've been put into the limelight because they are actively involved in putting in place some of the new responses and so on. On the other hand, they don't want to be seen as slowing business down in that.
I think the regulators have a very big challenge just right at the moment. It's a little bit like trying to fix the aircraft while it's in the air,
yeah.
while it's flying. So they're trying to respond, to the current immediate needs of today's situation, institution by institution, addressing weak institutions, making sure they get the capital and liquidity that they need, and so on, and strengthening the management of those institutions. They're also trying to think in the medium term what needs to change. So there's a couple of aspects there. They're looking at things like, how do we strengthen cross-border crisis response, and cross-border, how do we harmonize and do a better job of cross-border supervision for the biggest international banking groups? Simultaneously, they're looking at retooling or redesigning the architecture of the global bank regulatory framework. For example, addressing this pro-cyclicality issue by changing the requirements for capital that banks need to hold through the economic cycle. So they're trying to, on the one hand, respond to the immediate need, on the other hand, quite quickly articulate to the politicians, the treasurers and finance ministers and the G20 and the global population more generally, hey, we have this under control. Here is what we're going to do differently going forward to rebuild the framework and restore confidence and trust in the global financial system. So they've got quite a difficult job. There are many proposals and some of them are quite technical, but that's in general the challenge that they have.
Given the fact that there are a number of moving parts, even in the discussions that need to go on globally to work out what the global response should be to the current crisis, how do you see a sort of a congruence between all of these different initiatives, and what are they going to amount to?
Obviously, we're not going to get a solution that works if what's coming out of the leading industry bodies is sort of perpendicular or heading in a very different direction than what's coming out of the Basel Committee and the Financial Stability Forum, just renamed the Financial Stability Board. So the good news is that there is very extensive, open dialogue between the industry bodies, including the IIF, but others as well, and the various regulatory groups like the Basel Committee, the Financial Stability Forum, and so forth. Everybody is completely aligned in the need to build some consensus around the best solutions to the challenges that we face. So there's a very high degree of dialogue and sharing of drafts and proposals and feedback loops, and there's just a very rich dialogue going on right now with a shared commitment to find the best possible solutions. More than that, there's a high degree of philosophical alignment between the consensus industry positions on some of these most difficult issues and between the philosophy that's underpinning the regulatory response on those same issues.
Mark Lawrence, thank you very much.
You're welcome.